Hi everyone, this is Adam with the Adam Lee team and Dewitt with Geneva Financial. Today we're going to talk to the first-time homebuyers. The biggest thing for the first-time homebuyers that I've noticed is that they don't know what they don't know. They don't know what they're supposed to know. The first question would be is, what does it look like from your end? How do they get pre-qualified? What are they looking at? What are you looking at when you're pre-qualifying? So I'm a first-time homebuyer. What do I do?
Well, first off, buying a home can be very daunting.
Yes.
People think it's a very scary, long, drawn-out process where you're going to hear terms you've never heard before. It's my job, or our job as well, to go through and make sure that all those questions are answered. Okay. A buyer, when they go through and they get ripped off, it's not out of stupidity, it's out of ignorance because they just don't know.
Yeah, they don't know.
So the first thing we do is we need to sit down and go through and explain the process. So our first consultation is we sit down and we talk about, okay, here's how the process works from the initial application up until getting the keys.
Okay.
We explain everything how it works so the whole process does not seem, because once you see it and you see it do it once, you realize it's not as scary as it sounds.
Right, right. And I've noticed that as well. And for what I've noticed with first-time homebuyers is once it's explained to them, then it's not so scary. They can kind of take a deep breath, think back and go, okay, that wasn't so bad. And I think a lot of the times they're scared even to make that initial phone call to you because they're afraid of what they're going to hear or what they're not going to know. So what is that pre-qualification? What are you looking for when you're talking to them and consulting with them?
Okay. Well, that first consultation, we usually can do it over the phone. It's about only maybe 10 or 15 minutes to go through and explain everything. Sometimes first-time homebuyers, they want to meet in person. We love to do that as well. We love to meet people. But that first conversation, we're going to go through and we're going to view your credit report. We're going to go over your income. We're going to go over your assets. We're going to go over the different loan programs, different down payment requirements, stuff like that. So you can kind of see, okay, here's where I'm at, here's the situation I'm in,
right,
and here's all the options available to me. Okay. So in that first conversation, 15, 20 minutes, you're going to have a great outline of here's what I'm looking at. Here's my situation. So it's not scary. It's not a daunting process. It's not a long process. It's very quick and easy to kind of sit back and see, okay, here's where I'm at.
Good, good, good. And what are the different loan packages that are available to a first-time home buyer? What does that generally look like from what you see?
Okay. For most first-time home buyers, the big limitation is the down payment. It's kind of hard to come with a down payment. You're buying a house. Houses are expensive. It's the biggest debt you're ever going to take on to do that. But we do have loan programs for first-time home buyers with as little as no money down. There are loan programs where there's not a down payment required. And these loans are actually still very, very affordable. The interest rates are as low as just the other loans that you see, on the news of the different mortgage rates. Right. So usually that's one of our most popular loans is the USDA rural housing that does not have a down payment requirement.
Right.
Another one for first-time home buyers is an FHA loan. Stands for Federal Housing Administration. Okay. This is a fixed rate loan with a 3.5% down payment that needs to come from the buyer, or it can even come from a gift from a family member.
Okay.
So that's also a great thing to go through for first-time home buyers.
Awesome. And from what you see, what's normal for closing costs? Because that's one of the questions that I get asked a lot is, a lot of times buyers don't understand that there are other costs that are accrued by buying a house. And a lot of the times they think that they have to pay my commission, which isn't the case. The seller actually pays my commission to represent a buyer, believe it or not. On your end, what do people really, speaking in general, what do people look at on closing costs? What are they looking at?
Okay. When you buy a home, in addition to your down payment, if there is one, there are some costs that you were saying. Your appraisal fee, you got to pay the title company. There's a few things that go in there. In general, we ask them to budget about 2%. 2% of the purchase price is what your closing costs are going to be. And so in addition to your down payment, we're going to be doing an FHA loan, which has a 3.5% down payment. Add on about another 2% to that for your closing costs. You need to have saved up at least about 5.5% of the purchase price for a down payment and closing costs. And we'll be able to go through and work it out where that would be more than enough to save to get you into that house.
Good. I love it. One of the other things, too, is it depends as the market shifts back and forth from buyer to seller market. Sometimes we can get those completely paid by the seller, and sometimes we can't. It really is house by house, case by case basis, depending on how hot of a property that is or how big of a demand there are for homes in a particular neighborhood. If there's more homes on the market, a lot of times we can get those paid. We can get those closing costs paid, so they're only coming up with that down payment. But I think it's a very wise decision to have that money budgeted in case we find that dream home and we don't have the ability to get those closing costs paid by the seller.
And that's also one of the reasons that's very important to work with an agent who knows the market.
Yeah.
Because a lot of agents who are part-time that don't know the market, they need to know it so you can know what you can negotiate back and forth.
Absolutely. So one of the things that I get asked from time to time is 15-year mortgage versus a 30-year mortgage. So as it matters to a first-time home buyer, what tends to be what most people do?
Okay. Well, a 15-year mortgage, obviously you're paying your loan off faster. There's a slightly lower interest rate for a 15-year mortgage, but the payment is substantially higher. Most first-time home buyers are looking to get into a house where their payment is going to be about what they've been paying in rent, which is very possible happens more than you would think. And a 30-year mortgage, which would be a fixed-rate mortgage, your rate would never change, is most popular for a first-time home buyer because it gets them into the house that they want, the house that they need for their family, but it also keeps their payment relatively low so they can go through and have that house be affordable to them. So they're not cash strapped or house poor, as we may say.
Right, and I love the fixed rate mortgages. I'm such an advocate of the fixed rate mortgages because so many people got in trouble with the 3-year adjustable rate mortgages or interest only loans and balloon payments. It just gets nasty real quick. And especially for our first time home buyers, I feel that that's part of what you really need to do your research on as a first time home buyer is that loan package. What is your payment going to be? What does it look like? I know Dewy, one of the things that I like about Dewy is he's not just going to give you your principal and interest payments. There's other things that are wrapped into that mortgage that he's going to go through your whole payment. This is what you're going to be paying on a month-to-month basis. And I think that's where it's crucial for first-time home buyers to get that information, any and all information that they specifically need in order to make the best decision for them.
That's exactly correct. When we go through and do our initial consultation, one of my goals is to make this process as easy as possible for the buyer.
Right.
And then also make sure that there are no surprises. So the time we go to close your loan to sign at the end of the process to buy that house, we know exactly what those numbers are going to look like. There's no surprise at the end. The number at that final table is the exact same number we were talking about when we first started the process. Nothing changes. So the whole process, we go through and talk about your payment, includes everything that it includes. So when you get to the end, when you know what your check needs to be every month, you're going to write to your mortgage company.
Right.
We know exactly what that amount's going to be, and it's not going to change.
Perfect. I love it. If you have any further questions, feel free to contact me or contact Dewy with Geneva Financial. Contact us. Let us know what your questions are. If we haven't answered it in this video, we're more than happy to take some time and talk with you over the phone or in person to make sure that you get the information that you need in order to make the best decision. We truly believe that we're your advocates in real estate. We're here to help you and you achieve your goals. So again, Adam with the Adam Lee team, the one and only Dewitt with Geneva Financial, and make it a great day.